Hello traders, Gary Wagner here, approximately 11 o'clock in Honolulu, 5 o'clock in New York on a Friday. Happy Aloha Friday, as we say on the islands. It is the 5th day of June, 2015, and this is the daily report for gold and silver. First, an apology for coming a little late. I did have some technical difficulties and using a backup computer, which I realized was not up to date once I had issues with my first primary one. To the markets. Currently, we've got the precious metals under moderate pressure today, although they are off of the lows that we have seen on the day. The low in the market, of course, being around 62, the high 78, and our current, of course, is 71.70, down about $3.50. Silver also trading lower on the day, off about 28 cents or 17% on the day. Current is 1607, and excuse me, that's off 2 cents on the day. 1607, 1592 on the high, and 1616 on the low. So traders, no doubt, interesting activity found within the marketplace itself. We did have some jobs numbers come out. They were favorable. Favorable enough to move the NASDAQ up, to move the metals down. We had oil up today. To the metals themselves specifically, we did actually have gold. Now, as I said, it closed at around 71. Our target, initial target on this is about 60, and we did get a low of 62 today. So we're probably going to want to see how that market opens on Monday next week. We're moving into, I'll call it oversold territory, but we're certainly not there according to our moving average convergence and divergence. However, on our basic Elliott wave count, this of course being our very, very short-term count, as you can see, we have actually reached our numbers. So if we do get any kind of spike up, we're probably going to want to pull profits. Simply looking at this as a counter wave. Overall, I'm still looking for the market to go lower. It's what's going to happen on Monday is what we are referring to or talking about. Because to really have a sense or a feel for our more long-term market forecast, we have to move to either dailies or half-day charts. What we're looking at right now is, in fact, our daily charts. And on their standard, this is Japanese average format. We also do have our Elliott wave count. When we look at this particular play here, we're looking at this fifth wave down. This, of course, being an intermediate. This is that fifth that we were looking at right in here. And so what I mean to say is as follows. In other words, I believe that it's moving down medium term, but it could spike up on Monday or Tuesday. And this is really what I'm talking about. As we look at this wave 4, this wave 4 has now had a 1, 2, 3, 4, and 5. And so it will go into some sort of an A, B, C. And of course, all things being equal, in other words, if the same factors are in the market that had been putting pressure on the market, it will then go back into a bear 5 count. 1, 2, 3, 4, and 5. And that's where we would look for this to really terminate, roughly at the 1140 area. So longer term, I do believe the market's going lower. I do want to take a look and see how it bounces on Monday if we get a follow through of selling or if we get any kind of firmness in the market, and of course we'll act accordingly. Now next, I want to look at some of the longer term studies in gold. So we'll pull up our weekly chart to start with. And if this is straight candlestick format. And what we see, of course, is over the last 3 weeks, we've had this dramatic decline. It really began in terms of any kind of a candlestick pattern here where you had a dark cloud cover, confirming candle, and of course, this would be what's called a dark cloud cover continuation because we're working off of this primary pattern, the dark cloud, and we've got a consistent stream or a consecutive stream, I should say, of red weeks or lower closing weeks. The other thing that we really want to look at is, first of all, our channels that we're looking at within gold. And we've definitely got this downward bias, there's no doubt. But the interesting thing or the noteworthy factor today in terms of the close is that this close is coming in really below this midpoint. And that, to me, would necessitate or signal a lower pricing next week based on this technical study. And then lastly, in terms of our weekly chart, once again, we just want to kind of take a look, because I do believe that when we consider shoulder, and head, in other words, we've talked about this over the last couple of weeks, this potential for a head and shoulders pattern developing. What that tells us, of course, is that we would in fact see lower pricing. So based on the fundamentals that we're looking in the market, as well as some of the technicals, interim term, I am looking for lower pricing in gold. Over the weekend, obviously, we're maintaining our short positions in both gold and silver. We've already moved our stops to protect any kind of a loss. The market did move in our favor today, so now what we really want to see is what kind of follow through we have on Monday, and from there we can generate our next strategy. Very similar activity when we look at our silver chart. First of all, this is our daily chart. The difference, of course, when we look at the downward sloping channel on this particular chart, we've actually broken below now this lower level channel right in here. MACD is still showing us we have a bias to the downside. In terms of support levels, we're looking at the potential here, but really 1550 is where we genuinely see on a technical basis the first real level of potential support coming into the market, and that's really based upon this particular bottom here. This has been Gary Wagner wishing you, as always, good trading. We will send you a preview edition once I resolve the issues with my primary computer. We will be sending you another preview issue of the new expansion to the gold forecast covering additional markets, along with an offering that will come out to you this weekend at the latest on Monday. Have a great weekend. Bye-bye.